research. Do your own. Here I am. Do your own research. Do your homework. Please, back off. I'm not an expert. I don't want on the screen, but anyway, I am not an expert in the stock market, so you should always do your own research before doing anything. Today is a special day. I got paid a dividend from Armored Residential REIT, and I'm scrolling down here, and you see here I got a dividend payment. No, 15 hours ago. Dividend payment. They paid 10 cents. I had 450.28 shares, and I paid $45.03. That's being reinvested in today. And there you go. And that was reinvested at $45.03. And I got 4.249 shares. So pretty much 4 shares. So that $45, what it did was make me 40 more cents. So next month, if I don't buy any shares, which I probably will buy some because I'm on bad turn right now, the price is going down, buy the dip. But next month, I don't buy any shares. My next dividend payment will be for November the 28th. And I'm getting $45.43. And the dividend for December, if I don't buy it, is reinvested dividends, don't buy any more shares, will be over $46. And you see how every month I make more money just based on dividends alone. Just based on dividends alone, I'm making this money. Now, the $45 is pretty cool to get. I mean, it's pretty cool to get. I'm a young person. I'm in my mid-30s. Getting this $45 now is great because I can just buy more shares. And the costs right now for this particular stock is $10.46. The only problem is I am down $292. And that does worry me some. As a dividend investor, you want to be positive. And it does worry me a little bit. And I'm a cash flow type person. I'm a dividend investor. I don't concern too much about monetary return because I'm worried about dividends in the future. 10, 15 years from now, will you be still paying a dividend? Now, they are in real estate, and I can't say this, but look, I've been tracking this stock for a couple of years now. Just the growth. Now, before the pandemic of 2020 March, it was trading at $20. Now, it was going, $23 a share, and back then it was paying 17 cents a month per share, and it was going down slowly. It went down to $16.85, but it was on the way up. I think it was kept going up while the pandemic going on, and then once the pandemic hit, everything that dropped. So you could have got some really cheap shares. It has never recovered from it. Again, it has recovered from the $7 and the $8. It has recovered, but not much. There's been $9 and $12 in there, $11 in there. Now it's back to $10. It has never recovered. So you got to keep that in mind. I keep that in mind. But I'm looking for the dividend payment. Honestly, I buy this just for the dividend. Honestly, I'm a long-term type person. And once I, quit working, I want to have, all our retirement accounts. I want to have my dividends paying bills. So I don't have to worry about anything. So this $45 now, if I just keep investing for the next 4 to 5 years, I get easy to $100. With a dividend payment, give me these 4 shares. I could buy 6 and get $1. 6 shares, I could make it to a full dollar payment. So, so that's what I'm looking. I'm looking towards a long term. And I want to get this stock to $100 a month. I would like to get that. I'm not sure I would get there, but I think at $100, I will stop buying it with my own money, unless there's a big dip, and let it take the $100 a month in dividends and just reinvest it back into the company. I would do something like that. I don't want to put a lot of money into this. I want to diversify my portfolio, and I'm not getting financial advice. So please do your own research. Take it to professional. But I'd rather, if I my first goal is to get to 500 shares. Right now I have let's see, I should have 459. So right now my first goal is to get to 500 shares. That'd be $50 a month. Then I must decide whether I'm gonna go ahead and get the 1,000 shares. With the 1,000 shares, I'm gonna get paid $100 a month for this one company. Now, at 1,000 shares, as long as they keep paying the dividend, I'll keep investing. But once I hit the 1,000 shares and they pay me $100 a month, I would pretty much stop buying this stock altogether, because I don't want to keep putting all my money to one basket. I want to get to a certain point, and with $100 per month, even with the current price, you do my calculator here, 10.46 times 8, I could get 9 and some change shares, so almost 10 shares. I get almost 8 to 9 shares a month. That's 80 to 90 cents per month. Every month it goes up 80 to 90 cents. So I make $100 one month. Next month I get $100.90. Then the following month I get $101.80, and that will be $1. So it's going to increase every month. I think $100 a month is suffice. I should be focusing on other companies to pay me a dividend. But it's my dividend payment. I like the company. They're in real estate. They're located in Florida. So business is booming in Florida. The price does spook me a little bit, but as a dividend investor, you want to buy dips. When you want to buy dividend stocks, you want to buy the cheapest you can get it. You want to buy on the high, you want to buy it in the low. And right now it's still low, but they pay me $4 to $5. And if I had to pick a goal, my first goal was to get to 500 shares, 500 shares total. I'm gonna get that. Then I'll make a decision based on where the company is at that time. Should I continue on to get 500 more shares? That's going to be a struggle. That's not going to be easy, because it'll take me a while to get there. But, I'm thinking long term. If they can continue to pay dividend, that $100 a month, compound that over, that's $1,200 a year. Compound that, the $1,200, that's $1,200 a year. You combine that with 10 years of dividend investing. I mean, that's some money coming in passively. So there's a lot of things that's on my mind, want to figure out, and I've got to figure it out. It's gonna figure it out. But I will get to 500 shares first, and then I decide, hey, I'm gonna go ahead and go 1,000 shares and see what happens. Don't know yet. But yeah, look at the 52-week high. It's only $12, and the 52-week low is $9. So it's staying around that price range. Not bad for a monthly plan stock as far as the price. Look at today's high and today's low. I mean, you couldn't go wrong either or, because 20s is different. So you couldn't go wrong. The dividend yield was kind of high, but it's in real estate, so real estate is usually pretty high. They got paid 90% of their cash to the dividend holders, to stockholders, not dividend holders. I don't know. People say hold. I'm holding right now. I'm not gonna sell it. I want the dividend payment. I want that $100 paycheck. And that's a good amount of money. I mean, that's a good amount of money. I don't have to work for it. I'll get this passively. And let's imagine when you're 55 years old, almost 60, you're getting this dividend payment, and by that time, it may be $200. You get this one company paying $200 a month. That can, pay some bills. That can really buy groceries, pay bills. You can live off that money. So I'm looking at that. So the first goal, get to 500 shares. I got 450 now. It's 460. So I'm pretty much close to 500 soon. That'd be $50 a month. So I gotta decide, am I gonna keep buying this or not? So I keep update to my ARMR REIT. My ARMR REIT is my biggest holding in my portfolio, and like I said, I like QLD. I'm still investing in that. Still AGNC and Main Street Capital is one of my favorite ones. Well, always my favorites, but ARMR, I think, for the price, and it pays dividends monthly at 10 cents. So I bought the dips. It was $9, $10. I bought the dips. Didn't buy the high, but bought the dips. So I like it. So this is the end of my video. Please, if you want to join Robinhood, I will link below the description box below. You can join Robinhood. And thanks for watching. Subscribe to the channel and see you next time.